Hey, founder. Welcome back to Founder Get Your Life Back. I'm your host, Jennifer Todd, profit and performance expert. And today we're going to talk all about revenue and revenue as a vanity metric, why it's important to track, but also what else you should be tracking instead in order to get out of the weeds and get your life back. I'm sure that, like most founders that I work with, you're tracking your revenue. You may even be focusing on growing your top line revenue, thinking that that's the answer to being able to afford to get out of the weeds, to make that next hire, to invest in that next software purchase or that next system or that business coach or whatever it is that you need to buy. You're focusing on growing that revenue. And I'm going to make a few suggestions on why that might just be keeping you stuck in the weeds and what you might want to do instead. So, most founders focus on revenue for two specific reasons. One would be the market tells us to do that. They like to qualify business success based on whether or not you're six figure, seven figure, eight figure, or nine figure business, etc. And I think that that does us founders a disservice because your top line revenue has absolutely nothing to do with how successful your business is. What is a better indicator of business success and keeping you stuck or letting you go free and work in a business that you love and enjoy? Well, I suggest that revenue is a vanity metric because it kind of serves as a gateway to this magical seven figure, eight figure club that so many small business owners are often finding themselves on the outskirts of, not being able to be led into. And I'm thinking of a couple of mentoring and mastermind organizations specifically geared towards seven figures and up. And on those applications, they never ask if you've got cash in the bank, how much money you're taking home as the owner, and or if you're profitable. So those are the metrics that we should be focusing on in our business to help us get out of the weeds and to help us get our lives back. So let's talk a little bit about that today. I can tell you the story of a client that I had several years ago that focused solely on winning contracts and not necessarily on creating a sustainable, profitable, cash flow positive business. And their ultimate goal was a very short term goal of scaling and bailing their company. And when I say scale and bail, what that means is grow that top line revenue, land as many contracts as possible so that you can sell for the highest price possible in the shortest amount of time. Well, that scheme ended up backfiring for this client in more ways than one. First off, there were four owners, and the business was a client of mine from the time they were starting up with three owners to they let a fourth guy in about a year and a half into being in business. And what was interesting was they were so focused on winning contracts that they weren't really focused on the financial aspect of making the business profitable and having enough capital, which is cash in the business to be able to grow the business the way that they wanted to grow it in order to sell it. Really, they were older and this wasn't a long-term prospect for them. It was a short-term prospect. So what ended up happening is one of the founders was so stressed out because they kept adding more contracts and adding more contracts that this founder happened to be the one in charge of finance. They ended up having at least two heart attacks that I can remember just in the 3 or 4 year span that we were working with them. And one of the founders that was the program manager of all the contracts was sleeping in their office. They were so daggone busy, they couldn't even leave the company to go home at night. And one of the founders was the money guy. And they were basically funding the shortfalls and funding the cash flow gaps that weren't already being covered by very expensive, high interest rate credit cards and short term financing in the way of a Blue Vine and things like that, where you can have them pay you your customer receivables and then they charge a big chunk of that change and you never get that money. Long story short, the only founder that wasn't really suffering was the founder that was the subject matter expert. Now, I say they weren't suffering. They heard the stress. They heard a lot of the things, but a lot of the operations were outside of their control because they were the subject matter expert. They weren't the ops person. They weren't the finance person. They weren't the business development person. They were just the one with all of this technical know-how. So they were kind of shielded from all of the mess that was going on inside this business. Again, their goal was maximize that revenue so that they could get acquired or purchased by a much larger contracting company and then walk away with a bunch of cash in their pocket. Well, fast forward, it's been almost 10 years and they still haven't been acquired. They are still running the same game where they're saying yes to all the things. They're saying yes to any kind of contract that brings in that revenue to fund the shortfalls, to rob Peter to pay Paul. They're still playing that game because nobody wants to buy a business that's not profitable, especially when the subject matter expert is going to be walking away and not having that expertise in the business anymore. So there's a lot wrong with the scenario, but they're focused on growing top line revenue, going from 0 to 100 million in 3 years really put them so far behind. What would their situation look like had they slowed down, really focused on what they were delivering, focused on the value that they were providing, focused on codifying that expert's knowledge and getting it out into their organizational world, so to speak, so that they had something tangible to sell outside of just a business that was struggling for cash and profit. Ironically, they're still in business somehow, but they are not sold. So, how can we avoid that? Because they don't have lives. There's 4 founders, they're all stressed. One of them almost died. How can we avoid that as founders? Well, we want to be able to know what's profitable inside of our business, what creates the cash inflows more than the cash outflows of our business for us so that we have a cash surplus and we don't have cash flow emergencies. So we have to be able to know that to be able to make better decisions about what to sell and what to offer to our customers. I was in the same boat in my CPA firm before I switched my offers to be specifically to my genius zone, which is profit and performance advisory. As a CPA, I grew up in an industry where the big firms, they offer all the things. They offer accounting, auditing, tax, pension advisory, a lot of different services. And so I grew up with the mindset that you say yes to everything that walked in the door. You lowballed the fees and you just did all the services that you could possibly do. Saying no just never was an option. And after I left the big firms that I worked for, I operated my own firm that way, thinking that I was going to do things differently, at least as far as adopting software and technologies and working more efficiently, cutting the fat, so to speak. But I still found myself very burnt out, very spread thin, underpaid, and being the bank for my business. All because I said yes to too much. I said yes to the wrong offers. I said yes to the wrong clients. And I really didn't limit what I was doing. And so, fast forward to today, and now I have one offer and I have much smaller client base, but my top line revenue is better and my profitability and cash flow is better, much, much better. We're talking many times better. And then, of course, I'm happier. So, I mean, it's a win win all the way around. So, not only have I lived this as a founder and a firm owner and a subject matter expert, but I've also lived it as just somebody that was afraid to say no. So, why does this happen? Why do we, as founders, find ourselves overworked, underpaid, saying yes to everything, and we don't know what we need to be doing to make better decisions in our business? Well, one is, again, the market. There are messages, whether they're explicit or subliminal, subconscious messages out in the marketplace that tell us that bigger is better. How many business books are out there that talk about scaling, 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 scaling? And I always say scaling is overrated because if you scale before you understand profitability, you're setting yourself up for failure. You're setting yourself up for burnout and you're setting yourself up for bankruptcy. So we have to understand profitability and what creates cash inside of our business so that we scale the correct thing and we scale easily and we scale profitably. The second reason why we make the decision to focus on revenue is because it's easy. Revenue is very clearly stated at the very top of our profit and loss or income statements. It's super easy to see how much we're selling. It's super easy to focus on that top line number. It's the biggest number typically on our income statement. And honestly, it should always be the biggest number. But what isn't so easy is seeing the profitability of our offers and the profitability of our different customer types and the profitability of our contracts, unless we are very specific in how we're putting that information into our accounting system. So, our accounting system has to be set up properly to give us the right visibility into the profitability of our offers. So, when you're stuck in the weeds, you want to be able to spend the limited amount of time and bandwidth that you have on your most profitable offers. That means getting really comfortable saying no to all the things. You have to say yes to less. You have to understand what's profitable in your business, focus on delivering those profitable offers and only those profitable offers. As a recovering people pleaser and scarcity mindset enthusiast, I can tell you that it's not easy to get comfortable saying no, especially when you can do a lot of things. You have been in the habit of saying yes to all the things. It is difficult to start saying no, but I guarantee you, once you start, it gets easier. And then it may even become a source of pride. Reminds me of the quote from Steve Jobs in the heyday of Apple. He said, I'm more proud of what we don't do than of what we do do. And he was very clear about knowing that they had limited offers, they had a limited expertise, they knew what they did really well, and that's what they did. And they built a business that was one of the most successful cash flow rich businesses out there by focusing and by being very clear on what they did and didn't do. So I take that lesson to heart and know that it comes from a place of wisdom, something that we could learn. We're not all going to be Steve Jobs, but we might as well take those lessons from the people that did things really well and try to implement them to scale our businesses in the right way. So if you called me right now and you wanted to know, I can't see in my business what's the most profitable thing, what should I do? I would challenge you to go with your gut on this first. And I know that sounds a little bit counterintuitive, and I don't like telling my founders to manage their business on their gut, but short term, go with your gut. You probably know what drives the most profit in your business because you know what you charge for different offers and you know how much time and effort and expenses go toward putting that offer out into the world to delivering your products and services. So I want you to first make a good guess. What is my most profitable offer? After you kind of create your hypothesis, you're going to test it. You need to go into your financials and look and see how much information you actually have available to you to know the profitability of your offers. So you're going to need to know what the direct costs are of creating and delivering your offers. And you're going to need to be able to assign those direct costs to the offers that are being deployed in your business. So when I say that, I mean for a contractor, that means assigning job cost to the contract. For a service provider, that means assigning labor cost to customers and to projects. And for people that are selling products, that means assigning cost of goods sold to those individual products as best you can. This will give you what's called margin or gross profit on these products and services and contracts and customers. You're going to have so much visibility into what's driving profitability and what's driving losses in your business once you can do that. So if your accounting system is not set up to be able to give you that data, to be able for you to be able to input in that way, to be able to produce reports to give you that high level view, then that's the next step is get your system set up to where you can get your profitability reports so that you can make better decisions on what you should be offering. We only have so much time. We only have so much energy. And we want to be able to focus that time and energy on what creates cash flow in our business. It's the only way you're going to get the business you want, to fund the life you want, to get your life back. So focus on profitability. So, your task for today, after you've explored what visibility you have inside of your offers and the profitability of your business, I want you to go back and envision if you were to sell your most profitable offers and eliminate the ones that create losses in your business, what would your bank account look like in the next 6 to 12 months? What changes would you want to see in your business? What changes would you want to see in the bank account? How much more money would you have? What would your team be like? What would their job satisfaction be like? What would your job satisfaction be like? What would your happiness level be? What would your energy level be? How much closer would you be to getting your life back if you only focused on selling profitable offers? Your team would have so much more energy and time and mental bandwidth to be able to innovate and to make better choices and to do that work so much better when they're limited in what they're required to do and how they're required to work and the outcomes that they're required to provide to your customers. I know it's not easy to say no. It requires practice and it requires a mindset shift from scarcity to abundance. And I know that sounds woo woo. I am a business coach. I do believe in the power of what you tell yourself and what you believe that shows up in your results. So I'm going to give you this little tidbit to kind of help you learn how to say yes to less and say no to more. And what that is boundaries are kindness. And it's kind to your team and to your customers and to yourself when you put up those boundaries. How does that work? Your team knows better what to do when they know they're limited in what outcomes they're required to provide. That is showing them kindness. Your customers you're limiting your bandwidth, you're limiting your team's bandwidth, you're limiting your energy to serve only those customers that want the highest profit offers you can provide. That's kindness, not only to your good paying customers, but to the bad paying customers, because you're probably not serving those bad paying customers very well, or you're serving them to the detriment of your good paying customers. So we don't want to do that anymore. We have to reserve our energy, our time, our mental bandwidth, and our resources and our team's resources for those best paying clients, which are buying the most profitable offers. Your team will also have the mental and physical capacity and bandwidth to make those offers even better. They will get better and better at delivering them, at meeting your customers' needs. It is an exponential improvement in your business in more ways than you can even imagine right now. Saying no is a kindness to you now and to your future self and to your team and to your customers. So take that bit of advice to heart. So I want you to practice saying no, start thinking about your most profitable offer. And then I want you to kind of qualify it. I want you to think about, does this offer fill me up? Does this give me a lot of job satisfaction to offer out to my customers? Do I love doing this? Does my team love providing this service? If that answer is yes, you are moving in the right direction. If that answer is no, we've got some work to do. So that's where we have to figure out what is it that you love doing and what is it you want to offer and how can we do that more profitably so that that becomes your most profitable offer. So there's ways to create and architect your business so that you have more energy, more time, more money, and more joy in the day to day when you take a step back, limit what you're doing, and really examine and analyze what makes you more money. What is your most profitable offer? So remember, the beginning of this episode was all about revenue as a vanity metric. It really doesn't serve you very much to focus on that revenue number. It serves you much better to focus on that profit number and then how that profit creates cash flow to you. So we'll talk in a future episode about cash flow and creating cash flow, because just because an offer is profitable on your income statement doesn't necessarily mean it's going to be adding a ton of cash into your bank account right away, especially if you have certain capital expenditures, inventory, equipment, software, things like that that you need to fund. You have to pay for that stuff. So that doesn't necessarily show up on your profit and loss all at once. It shows up in the bank account as the payments leave, but it doesn't necessarily show up as an expense on your profit and loss. That happens over time. So a future episode will be all about monitoring cash flow, managing cash flow, and better ways to do that. But for right now, focus a little bit less on the revenue, a lot more on the profitability, and see what happens, what positive changes happen to your business, and how much more time, energy, and joy you have in your business so that you're slowly working to get your life back. Drop me a line, send me a text message, 1-804-599-4400. That text comes directly to me, Jennifer. I will read it. I'll respond to it. Let me know if this episode landed, or if you're having trouble pinpointing that profitability in your system. I might be able to give you some quick tips and tricks on how to find more visibility for your profit generation. And you can also schedule with me a strategy session. So I hope you enjoyed this episode. I hope you find that profit and get your life back, founder. See you next time.